This is Rick Rule for Rule Investment Media at the Mining Journal Select Conference in London. We're doing a series of interviews with all of the exhibitors to give people the opportunity to get to know the exhibitors better and to reach out to those exhibitors who they have further interest in. I have the pleasure today of interviewing Niel Pretorius from DRD Gold in South Africa. It's an interesting interview for me because my own shareholdings in DRD go back, I'm embarrassed to say, 40 years. Niel, first of all, thank you for your efforts on behalf of shareholders, and thank you too for your support of the Mining Journal Select Conference.
Oh, thank you, Rick. So I've been with DRD for 20 years, so at least half of that period, I'm responsible for the losses that you may have incurred.
The DRD on balance has been good to me. Tell me something about your background. What is it that you did that qualifies you to be the CEO of DRD?
So I was appointed the legal counsel for DRD Gold 20 years ago, and over the years I was fortunate to be given opportunities in general management, and then ultimately in 2008 I was appointed CEO of the company, and that's been my position ever since.
Going way back, DRD, then Durban Roodepoort, was, as the name suggests, a mining company that operated hard rock, very deep mines. The company's undergone a real transformation in the last 20, 25 years.
Yes.
Tell us about the current operations. Tell us what it is that you do and why it's different from what most mining companies do.
Yeah, no, certainly. Look, I think to a large extent your strategy, your corporate strategy as a company involved in mining is determined by the nature and quality of your ore body. And what had happened with DRD is that over time, the underground assets that we had just became harder to manage profitably, and the portfolio of sand reclamation and slurry reclamation assets became more prominent, up to a point where eventually we had either closed or divested all of our underground mines and focused solely on the slurry part. And what really set us on our path, our current path, was an 80,000 Rand transaction with Mintails, 80 million Rand rather, of 80 million Rand transaction with Mintails around about 2008, to establish a joint venture to recommission the Ergo plant. So we contributed 187 million tons of material from ERPM, and they contributed the plant. Over time, we exited them. They had other priorities, but that formed the core of the, let's call it the new DRD. And in 2016, when the gold price was fairly attractive, that little venture had reached a market cap of 5 billion Rand. So for us, that was a big moment. But ever since then, it's really been our focus to do the reclamation of tailings.
And it's important for, I think, the audience that's less familiar with what you do to stress the fact that you don't have to mine anything. It's been mined, it's been milled. What you're really doing is pulling the residual gold out of tails.
Oh, absolutely, yes. So our resource is stockpiled. We've got 6 million ounces. It's scattered across the Witwatersrand and also further to the west. We did a very good transaction in 2018 to acquire a project from Sibanye-Stillwater. Since then, they've been a 50% shareholder in DRD Gold, and that's put us on our course. We process about 2 million tons of material per month. We target roughly 170,000 ounces of gold per annum. And we've been making profits. We've been paying dividends now for the last 17 years, whilst at the same time offering, I believe, very steep gearing to movements in the gold price. So you can make money on either side of the cycle, and then for holding the shares, we reward you with between 2, 3, maybe sometimes 5%.
And are you able to say what your approximate all-in sustaining costs are at this operation?
Yeah, at the moment it's fairly high. It's about $1,500. And that's because we've embarked on a very ambitious capitalization program. We're investing in a very large tailings facility. We want to double the throughput capacity of one of our circuits. And then also, the Ergo life of mine, the company that we established through this 80 million Rand transaction in 2008, that life of mine had run its course. It basically came to an end in 2021, 2022. So at the moment, we managed to assemble a sufficient number of assets to generate the cash flows to bring a whole new cluster of surface tailings into that circuit and extend its life of mine by at least another 15 years. And then the target date to have that commissioned is financial year 2028. So we refer to it as Vision 28, and it involves, let's call it Ergo Phase 2. an entirely a life of mine that is entirely independent of the initial life of mine when we started or recommissioned Ergo in 2009.
So let's quantify that a bit. What's your annual production in terms of ounces?
So we pursue about 170,000 ounces, and that's dependent to a large extent on volume throughput. Once Vision 28 is implemented, it'll probably go to about 210,000 ounces, 220,000 ounces, by virtue of the fact that the other circuit is doubling in throughput capacity. The new Ergo would be a little bit smaller than the former Ergo, but the combination of the two will give us a slight increase in output.
And you'll be amortizing, if you will, that capital expense and that production against about 6 million ounces.
Yeah, that's correct. That's to bring all of the 6 million ounces into our production profile. The tailings facility that we're constructing on the far west rand, and I showed you the video earlier, and we've actually put that on LinkedIn. We refer to it as the RTSF, which is the Regional Tailings Storage Facility. Although our resource there, or our reserve rather, there is containing 250 million tons of slime material, it has the capacity to receive up to 800 million tons of material, which means that all of the tailings in that area could ultimately find its way onto this tailings dam, which, if it doesn't provide an opportunity for regional consolidation, at the very least should provide an opportunity for other players in that area to also at some point or another come to play.
And forgive me if I didn't hear you, but how many tons of material would you say are proximal to that plant? I mean, how many tons that you don't own would you say?
So we've got 250 million, and it can take 800 million, so it can take about another 500 million tons.
And is there 500 million tons of additional?
Yeah, there's more than 500 million tons, yeah.
Unbelievable. Traditionally, slimes recovery has been fairly capital efficient. You're spending, as you suggested, 3/4 of your market cap in the next 5 years in terms of capital. One would expect that after that, your sustaining capital requirements or new project requirements, unless you bought a whole bunch more assets, would be fairly small.
Yeah, it'll go back to about 5% of total cost, yeah, of cash operating costs, yeah. So ours is a long capital arrangement. It's more of a factory. It's more of a logistical exercise. So once you put up the infrastructure, then sustaining capex is relatively modest.
Niel, for those who are interested in learning more about DRD, who in particular do they contact, and how do they reach that person?
They can contact me, so they can send me an email on niel.pretorius@drdgold.com. I have colleagues who also assist me with communications, but I'm a good first stop.
I love it when the CEO says the buck stops with me. I want to talk to shareholders and potential shareholders. That's exactly the right answer. Yeah. Thank you for your efforts on behalf of shareholders, and thank you too for subjecting yourself to this interview. I appreciate it.
Thank you. Thanks for the opportunity. I appreciate it. Ray.
Pleasure.
Thank you.